So there we have it. George Osborne has delivered the final autumn statement of this Parliament and quite possibly his last as Chancellor. I think it's fair to say in the build-up, expectations were fairly low, and I think that was down to three main reasons. Firstly, the state of the economy. Tax revenues are much less than we expected. So with increased public borrowing to finance spending, we're finding that the Chancellor's hands were pretty much tied in terms of what he could do in terms of tax giveaways. Secondly, of course, there's a general election less than 6 months away, and the last thing the Chancellor wants to do is upset voters, especially hard-working families, small business owners and savers. And finally, I think it's probably fair to say that this autumn statement has had more leaks than you would expect from a Luxembourg tax office. What we did expect was a crackdown on tax avoidance. Even today, Starbucks are again in the news, accused of not paying their fair share of tax. We've heard advocated Google tax and other measures really aimed at high-tech businesses. Today also, Margaret Hodge has been in the news, advocating criminal sanctions against promoters of really aggressive tax avoidance. At Mazars, we've been shining a light on this issue for many years. An unregulated profession needs additional safeguards to protect individuals from aggressive selling of tax avoidance schemes. I meet and help a number of business owners who entered into these schemes many, many years ago, but even today have no choice but to invest significant amounts of time and money to keep these schemes going. So, let's look in a little more detail at what George Osborne did and didn't say today. Considering business first, there are 4 areas that immediately took my attention. The first is the 25% tax on profits artificially moved offshore, the so-called Google tax. Note this is higher than the main corporation tax rate in the UK. There are 3 initial interesting thoughts around this. Firstly, the rate of 25% is more than the UK headline rate. Secondly, I think it'd be really interesting how the legislation works for this. It sounds immensely complicated. And thirdly, it will be interesting to see the reaction of multinational businesses, both in the UK and those wanting to come to the UK. Secondly, is the restriction of losses, as we predicted days ago. This immediately applies to banks, but all businesses need to be careful because the rules could quite easily be widened out. There is some welcome news on the increase in R&D tax credits, both for SMEs and large corporations. What really interests me is that there are still lots of businesses that don't maximise this relief. The Chancellor also announced new anti-avoidance rules for umbrella companies, especially those who use low-paid employees and avoid employment tax costs. There have also been some changes for individuals. Anyone that has non-domicile status will find the cost of that increasing by 100 to 200%, and those individuals really need to re-examine their tax affairs and arrangements. Entrepreneurs relief has been a success in the UK, and I'm glad to see that it will be improved. Finally, we've had the stamp duty land tax changes. These were widely predicted and are welcomed, as we remove the slab system for a gradual increase in stamp duty. Given this was a net nil giveaway autumn statement, I think the Chancellor will be really pleased with how it went. UK businesses will be pleased to see increases in tax reliefs, but larger multinational businesses will be concerned at the level of complexity and uncertainty that the UK tax regime may enter into. But as ever, the devil is always in the detail.